you looking at the overall, bond picture? I know we talked a while ago, and you said that you felt bonds were going to meet the whatchamacallit. You thought bonds were going to start into a bear market, which would mean interest rates were going to rise.
Right.
That opinion?
Well, this is, I think, the biggest trade out there. I mean, the pattern we're talking about with the 10-year rate is what I'm actually looking at. The 10-year rate has been falling since 1981. It's, we're going on 35 years of a bull market in long-term treasuries. That's amazing how long that's been. And the pattern itself goes back to the early 60s. So it's really for me, it's the biggest pattern I have. It's over 50 years. So, there's some, for a pattern that big, there's some wiggle room for small moves. I think we're going to get one more peak in the treasury market, meaning one more trough in rates. I think rates are going to go probably a little bit lower than they did in February when we got down to 1.56. And then I think, we've been waiting years for this. People have been talking about it for years, that when's the treasury market going to turn into a bear market? And I think this is the year. I think we're almost there.
And I wouldn't be surprised. I mean, we're running out of time, but when I first started trading, the treasuries, the 30-year was at 5,500.
Right.
Now it's 160 something. You've made some calls on the treasury market, and I think you're feeling a little bit better about certain things in the treasuries. What are you seeing?
Yeah, I mean, this is one of these huge trades that only come along once, really, I think, in a lifetime, or twice in a lifetime. I really think there's one slightly higher high to come, and then the treasury market will have peaked long term. So for the 35-year bull market will have ended at that point, and a secular bear will start. And I think it'll be an incredible bear market, because I see interest rates going to 11% in the 10-year. So that's a very long-term, or a very big move. I don't know if it's going to be how long it will take, but I think we peak out in the next few months, sometime this year anyway, and then treasuries sell off for quite a long time.
All right, so we're looking for Jimmy Carter to win the election. You're looking for him to come back and
that's right.
But so now, how are you? Where do those indications come from? What type of chart are you using to make that determination?
I don't really specify what method I'm using, because it's my own. It has similarities.
It's proprietary, so we have to make sure we can't let them give up his secrets. But
right,
and you're still bearish the bond markets?
Super bearish the bond market. The problem is, people have been talking about this for 10 years at least. Once we've started getting down to these low rates, people are asking really how far down can these rates go? And it's just been a waiting game in terms of when will it complete. I had not believed we were close to completion up until this year. And I've been saying for this year, this is the year. This is the year that rates bottom and the bond market peaks. So we've been getting short treasuries. We're short municipal bonds through that MUB ETF. It's the only real way that I'm aware of that you can short. It's easy to short municipals. And then we are also short junk bonds through those ETFs, as across the board that way. But we're short the entire fixed income space that we can short. I also want to be short long-term treasuries, but that's much more of a long-term trade. As I've said, I think we can go as low as 1.3, 1.4%, which is where we bottomed in 2012 on the 10-year, and we're at 1.64. So we're very close. This is a long-term trade. I want to be short treasuries.
I know you believe that the bond market rally, the 36-year rally is now over. And I can understand where it's coming from, and we'll see. I mean, but obviously you've been pretty much spot on. I mean, I have to say that your batting average, if you were in the major leagues, man, you'd make about $20 million a year, getting paid as a player. But Matt Demeter, as always, thanks so much for being here. It's a pleasure.
Todd, thanks so much for having me.
This is our guy, Matt Demeter, DemeterResearch.com.
Rates having bottomed this past Thursday. We got to 1.5% in the 10-year. We could get, the big pattern we have says there's fudge room down to like 1.3, 1.4%, and that's it. It wouldn't go any lower than that.
Well, I said 1.25 was my call 6 months ago.
The 10-year rate has hit our bottom. It hasn't broken it. I still find where we bottomed last week, around 1.34. It still hasn't broken the pattern. It's just stretched it, but it's stretched it now to the point where I really don't think it should go much lower.